Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago office. Joining me today, as always, from Texas, Director of Feed Procurement, Mr. Jake Kingsley, and returning to the Grain Feed, grain and feed marketing advisor, broker, oats trader, TikTok extraordinaire, Mr. Brandon Weigel. Team, how are we today?
Doing all right, Jim.
Doing well, Jim. How about yourself?
Dude, I'm doing excellent. Brandon, how's the TikTok game?
Doing all right. It's holding up.
Dude, I mean, tons of viewers. For those of you out there on TikTok, follow Brandon Weigel and stay tuned for his oat trading advice, right, Brandon?
Not quite that, but maybe in the future, Jimbo. We'll see.
Maybe in the future. One day, you guys just wait. You see him here now on the lowly grain feed. One day, TikTok extraordinaire, stardom, fame. You're just seeing him here now. You'll then see him at the top later, right, Brandon?
That's right. Saw here first.
Dude, that's fantastic. That's fantastic. Speaking of the bottom, we got to talk about the grain markets today, you guys. We've got corn continuing to push to near contract lows for these 23. So let's start to jump in. Paige, if you would kindly timestamp the broadcast. Yes, Paige is back, and we're back on video, and we're timestamping broadcasts. Feels good. It's Thursday morning. It's the last trading day of August. So we're trying to wrap up the month of August before we head into a 3-day weekend for Labor Day. So just a reminder to the viewers and those listening, Monday, the grain and feed markets are closed. So keep that in mind. We also have to pay attention to that to see what the funds are going to do with positions, those fun little folks managing money in our beautiful markets here. They've had a nice little ride this morning. So as we record here, we did have December corn futures pushing down towards 475. They've made a nice rebound back above 480 as we record. Some of that also is tracking the swings of the wheat market, in which we had Chicago wheat back down towards 590, spring border back up above $6 again. Beans continue their little ride. They're back towards 1380 this morning after spending some time above $14 over the last week or so. And December meal, that stubborn little byproduct, after its very strong run up towards 420, is trying to inch its way back to $400 a ton. So it'll be an interesting way to end this week, especially after these skyrocket type of sessions we saw for beans and meal over the last couple weeks. So, Brandon, let's jump to that. With that wild swing, somewhat of a roller coaster here for the soy complex, and corn continuing to stay somewhere range bound between, let's say, $5 and 480. What's your take on the grain and feed markets this morning?
Yeah, so as far as December corn goes, right, we are inching closer to harvest here in the Midwest. There's a lot of people getting rolling on corn silage here this week and in the coming weeks. And if you look at things seasonality-wise, generally over history, December corn tends to put its bottom in the last 2 weeks of August or the first 2 weeks of September, right? If you look at a seasonality chart over the 5, 10, 15-year average, that's what it would suggest, right? And as everyone knows, it's been a roller coaster ride of a growing season in the Midwest. We've had a lot of ups and downs with weather, a lot of big swings in prices. And here the last few weeks, we've been dry in the Midwest for the most part. There's a lot of folks that are just getting into the fields. They're seeing some ears starting to drop, right, just because of how dry that plant is. I heard the term yesterday, turgor pressure, right? And basically, when the cells in the plant get so dry that the shanks start to snap. And it tends to happen late in the growing season, but it's starting to happen already in parts of eastern Iowa, some parts of southwest Wisconsin. I'm sure other areas of the country as well, but locally that's what I've heard. So what that means basically, once that shank snaps, that ear is for all intensive purposes dead, right? It's not going to add any more nutrients to it. You're not going to get any more fill. So a lot of people are concerned about the test weight on the corn this year. On the soy front, that market's still been very strong, well supported. That balance sheet, as we've talked a lot this year, is extremely tight. We can't afford to lose any more yield off of this national average on the soy number. And if we do, we're going to probably start to see some demand rationing here as we move towards winter.
Those are excellent points, Brandon. Thank you. Yeah, we do continue to talk about the balance sheets between those two and the tightness on soy. We're almost somewhat of a broken record, I think, here amongst our grain and feed teams of soy tightness. But the reason we keep repeating it is because we're tight. And if we bring these soybean yields too far under 50 bushels per acre, assuming we might do that, it's going to continue to squeeze this market. And I think before we recorded, we were talking about the weather up here in the Midwest versus Texas. It's okay now. Things feel good. We've had the windows open at home. Feels real nice. But we're back to mid to high 90s for 3 or 4 days next week, at least this far north in Illinois. You guys are not that hot pushing up into Wisconsin, but it's going to affect the I-states. And I think this is a key development period still, Brandon, right? For the soybean crop itself. There's still some areas trying to fill pods, and to have these back-to-back streaks of mid-high 90s and have the heat indexes pushing 100 during these development stages, not exactly ideal. I mean, so in terms of other conversations you've had with folks, are folks realizing this potential damage or yield reduction on their soybean crop?
Yeah, there's been a lot of concerns of it, especially last week with how hot it was. I mean, unusually hot for this time of year. That was really when those soybeans were trying to fill pods. It seems like the pod counts have been strong on the beans this year. So now it's just a matter of fact, are the actual beans going to develop to full maturity? Are the pods going to abort in some of these plants with how warm it's been? I don't think anyone really knows the answer to that yet.
Right.
By the end of next week, maybe we'll have a better idea. But right now, I think it's a pretty big guessing game across most of the Midwest.
Yeah, certainly a big guessing game. I mean, even there's that, large private crop tour that went across the U.S. last week. I mean, that very, let's say, regularly watched year to year. And even those folks don't actually try and really predict bean yields. They'll give us, potential pod counts and let us judge for ourselves. They will provide corn yields, and that crop tour, that corn yield number they gave wasn't actually too shabby. It was still above 170. It provides room for the USDA to cut their existing yield down from the 175 range into the lower 170s. But I think the market was nervous that maybe they were going to see some pretty catastrophic areas and maybe bring that corn yield number for the national average under 170. I'm going to call you on something you said, Brandon, because I'm not an agronomist and I will never claim to be. Did you say turgor pressure?
Yes, and I can't claim that one either. One of the guys I work with, he does work in agronomy. I learned that one yesterday morning,
Gotcha.
So won't take credit for that.
Gotcha. I thought you said burger pressure for a minute. My ears picked up. I got excited for Labor Day. But we'll cross that bridge when we come to it in terms of getting that burger pressure here this weekend. Jake, how about you, bud? What's happening in the feed markets this week? We've had quite the run on futures of meal going all the way up to 420 on D's, all the way back down towards 400. Some weird updates out of Canada maybe on what they're doing with their canola sheet. So a lot going on. What's your take?
Yeah, maybe we'll start with that Canadian canola piece there. A little bit of an interesting update on Canada's most recent monthly government report, similar to what we get monthly for our WASD. And they came in and they added about 1.1 million metric tons to their current carryout for this crop year. And for that balance sheet, typically 1.2 to 1.8 million metric tons is a pretty comfortable range for ending stocks there. They had been sitting in the July report at about 650,000 metric tons, and they came in and added 1.1 million metric to finish off 1.75. So that's a pretty big adjustment month over month for canola. We will see if the market has any kind of real measured response for it. So far, basis has not reacted, but we could see a dip back lower. It would likely be short-lived if it does occur. But the details around it are somewhat limited, but it's been largely accounted for in increased yields in previous year's crops, as well as reduced export demand, allowing for that change. So if that number sticks, I would expect maybe a short-lived break in basis, another opportunity to get some physical feed purchased again, and then try to catch a futures number sub 400 on the December contract to price that stuff out. But as big of a change as that is in the canola crop, in the grand scheme of things, it's less exciting for the North American protein production. You're looking at something to the equivalent of adding about a third of a bushel back to the current U.S. soybean crop. So not a huge needle mover there, but every little bit counts with a balance sheet as tight as we've been talking about here. So it could help. I think, again, if we do see a break in canola basis, it's going to have a little bit of help from soybean meal basis breaking down as well, which maybe we see something closer to harvest if we have yields come in as or better than expected and allow for a little bit more flexibility in that ending stock. So that's kind of been the thing we've been looking at in protein. Maybe a little bit of a run up in futures, and steady, strong soy oil values will allow for some movement in basis as well. And then coming back and looking at corn basis, we've been kind of eyeing river water levels along the Mississippi. That caused basis to kind of back off there for a moment, as there's concern about actually being able to ship our normal volume downstream and get barges back up in a timely manner. Another part of Brandon's comments there on ears starting to drop. We haven't heard any hitting the ground yet. And even more beneficial to a lot of our feed clients is that as you work further west through Iowa and into the Dakotas and down into Nebraska, it seems like the crop conditions improve a touch as you move further west. So that's good for all of our rail dependent markets. They've seen basis kind of lay down a little bit. I think we could see another little dip as we get in closer to harvest and really start to run yields through the combines. That balance sheet has quite a bit of flexibility to it, or forgiveness to it, I should say. Current yield estimates are somewhere in the mid to low 170s, and I think we could even dip a couple bushels below 170 and still have a very healthy ending stocks going into next year, all else unchanged. So we'll see how that kind of shapes up. In the Midwest and further east, it's a little more of a localized decision making. How is the crop looking in your backyard? How are silage tonnages going to come off? And then make your decisions on local basis there. It's a little bit spotty due to the nature of this year's weather during the growing season. And I think everybody's pretty well aware of that at this point. And then something else we've been kind of keeping a close eye on here has been this cotton crop and cottonseed prices for a lot of our dairies. We saw prices back way off of last year's high as the West was able to kind of reload their fiber and forage inventories. Bypass fat prices have really settled back into some more tolerable values. The Texas Panhandle crop got off to a pretty nice start with quite a bit of soil moisture. In fact, they were delayed due to some excess rain there in late May and early June. And that crop got off to a pretty nice start, again, with good soil moisture, and then really got hot and dry and hasn't really caught a break from those conditions since. And so the Texas cottonseed crop is trending very much in the same direction it was last year. We're burning up acres in a hurry. Yields are going to be down. And now moving a hurricane through parts of the Southeast could affect crop quality there. And so we've been kind of urging folks to step in if they intend to feed it, figure out how much they're going to feed and start buying sizable portions of their new crop needs down here. Texas area has been in the mid threes, back to the east has been closer to 300, and then you get into the western markets and you're more like $400 a ton, back into the Midwest there into the mid threes, pulling stuff out of the Southeast. And so I think those are reasonable values to start owning at this point in the year. Maybe we get a surprise of some better production closer to harvest and catch another little dip, but I don't think I don't think it's wise to wait too long to start buying this stuff. Again, soy oil values are strong. Crushers have not had great opportunities in the last couple of years, so they're going to probably scoop up just as much seed as they can and crush that. And so I think there's some real urgency around that one, if anything. Some of our other feed products are going to trend more in line with corn and protein prices, and we've kind of addressed our stance on that so we can be a little more patient there. But that might be one to act on this week, if nothing else.
Okay, well, appreciate that, Jake. It does sound like a potential action item then for viewers and listeners here. And of course, if you have questions, please reach out to EverAg and get in touch with Jake because, yeah, there definitely seems to be a little bit more urgency around that feed product. Similar urgency, I think, what we had a couple weeks ago, Jake, when, to your credit, you were hitting folks pretty hard on protein purchases when we were trading December futures into that 380, 390 per ton range, along with where basis was at that time in certain areas of the country. And then we rallied those prices up, about 30 to 40 bucks a ton at the board. And then that basis number started to squeeze a little bit as well. So if you have any anxiety over these specific products, please reach out because Jake's got his ear to the ground across the country here and has some great insight. So thank you for that, Jake. It has certainly been a tale of two markets, right? And both of you gents have touched on this, on the corn balance sheet being much looser, soy being very tight. We've seen prices reflect those balance sheets. And when we talk about having anxiety, we have not had much anxiety over that corn price, right, Jake? We have not been really stressing to step in and must own certain percentages of corn here. Obviously, on the lows, we would like folks, if they were still open, to step in and do something, but we don't have that anxiety for potential supply tightness as we did for protein, and as now we might have a little bit for the cottonseed ingredient as well. So all that being said, gents, I'm going to hold you guys to a couple bold predictions. We're going to borrow from Phil and Kathleen for their bold predictions on their podcast. Tune into the Dairy Download if you have some time. And I can see Phil now as we record, and Erica. All of our fans are in Texas at the moment watching the recording live. Great to have everybody. Please reach out if you'd also like to attend a live viewing, especially because we don't really do that. But it'd be cool if we did. So reach out if that's something you'd be interested in. But let's look back to the markets on some bold predictions. We're looking at December corn, gentlemen, as we record. Again, Thursday morning, we've got these futures hovering around 480. So, Jake, I'm going to ask you first. Is this corn contract, these 23, are we going to trade $5 again?
Ooh. I think we could. Yes, I think we could. Maybe we get in and some of the earlier harvested stuff, poor conditions tend to mature a crop quicker. And so maybe these folks get in and start harvesting some of the worst corn earlier, spook the market a little bit back towards $5. We're not too far away right now. So
we're not too far.
I think we're possible.
We came close this week, I think within a half cent. We didn't quite do it. So, Brandon, bold prediction. Will this contract, these 23 corn, trade $5 again?
Yes.
Oh, yes.
Yes, no doubt.
No doubt.
No doubt.
That is a bold answer. Not I think we can, right? Like, little engine that could. Brandon just say, boom, yes, we're doing it. Okay. And Brandon, you noted that if you look back on seasonality charts, depending if you look at 5 versus 10 versus 15 year, some of those spans we bottom out pricing in mid-late August. Some we hold off until mid-late September. So maybe part of Jake's hesitation on if the lows aren't in, we only go from here. But for maybe if they are already, only way to go is up. We'll see what happens when actual yield numbers are being thrown around off those combines there. We got to do another bold prediction, gentlemen. On December meal. Now, we ran this thing all the way up to 420. We're back within a shouting distance of $400 a ton, but we're still about $15 a ton or so from the lows of August at 380. So, Jake, will we trade 380 again for the December 23 meal contract? Will we trade 380?
Yes. Yeah, I think we will.
Oh, feel good about that one.
Yes, I think we will.
Oh, yes, I think we will. Okay, gotcha. Brandon?
Not as confident on this one, but I'm going to say no. I got to say no.
Woo-wee. That's fantastic. All right, so Jake's a immediate yes. We'll trade 380 Dees meal futures. Brandon is a no. I like that. We got to hit you guys on beans before we go. So we are trading 1380 on November 23 beans. Do we trade the recent high of 1409 and a half again? Do we retest the recent highs? Brandon?
Yes, I think we will. Yep.
Yes. Jake?
I agree with him. I think we get there. We don't sustain it, but I do think we get there.
Okay. Yeah, I think the way we've been chatting about the bean crop, I think there's another shot. I feel like we're going to push through and spend some time over $14 on beans. I think we'll hit that high, but also we're going to trade up there for a little bit. And maybe the lows, the seasonal lows, Brandon, that you mentioned, one could argue they're in already on beans, depending on just how concerned you are with this bean crop, that those lows have already established themselves. Whereas corn, that remains the great debate. So, gentlemen, great work today. Appreciate those insights and those bold predictions from the dairy download with Phil and Kathleen. Excellent work. Big thanks to Brandon for returning to the show. It's great to have your insights here. We'd also like to thank Corey and the Everag Insights crew for their support. A big thanks to Paige for production magic. Great to have you back. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.